Hello, friends. Welcome back to Market Shares. I'm your host, Tony Blodgett, and today I have a great interview for you. This is a good friend of mine, one of my coworkers, someone who, we became very fast friends. When Larry and I met, we just hit it off, and we've had a great relationship ever since. So I want to introduce you all to my friend, Larry Steinway. Larry hails out of the Chicagoland market and is a top producing mortgage professional. You're going to hear a little bit about his story. He also plays in a rock band, so we're going to definitely talk about that a little bit, and maybe just some other insights. Also, Larry is focused on growing as a regional manager, the Chicago market here at New American Funding, and just lots of fun stuff going on. So, Larry, welcome to Market Shares.
Thank you. Thanks for having me, Tony. Yes, fast friends.
Yeah, fast friends for sure. I mean, so how long, how long have we known each other now? Has it been a year?
The night I met you, we had enough dessert to serve the entire restaurant at our table alone. That's why we'll never forget that. You took one bite. That was it. Okay.
Yeah. Well, it was funny because what was the name? It was Gibson's, right? Gibson's in
Steakhouse
Chicago.
right there, right down near Michigan Avenue.
I mean, it was one of the best steakhouses. It was one of the best steaks I've ever had. And, I was like, well, we have to have some dessert, so we'll get kind of one of everything. I didn't realize they would be these huge, gigantic desserts, but hey, nonetheless, I don't know if you know this, Larry, but I'm on a very strict diet. I am not eating any desserts or sugar or anything in my diet.
Fully aware. I am fully aware. I sat next to you.
No more desserts. If we go back to Gibson's, we won't be getting the carrot cake. I'm sorry, but it's not going to happen.
That's right.
No, exactly. But we'll have lots of steak because steak is definitely high on my list of foods that I intake on a regular basis. All right, so let's get into this because I think you got a lot to share. But I want to start just giving people a little bit of background. I mean, you've been in the mortgage business for a very long time. You worked for many years at Guaranteed Rate,
right.
And we're one of the first employees there. So maybe just take us back to the early part of your career. Like, when did you get started in mortgage? Kind of how did that happen?
Okay.
And kind of what year was it? What was going on? And then we'll fast forward, and then we can start sharing with our audience some of the things that you're doing in your business today. How you've evolved your business to maintain kind of a top producer level in what's frankly one of the most difficult markets I've been in, and I'm going on 30 years in the mortgage business. So We'll talk a little bit about that, but take us back to the beginning if you would.
So I'm right at 30 years also in the mortgage business. Okay. Which makes us the median age players in the mortgage business, by the way. Okay.
Right.
I've been thinking about today, I'm going to talk a little bit about some mentors that I had, a couple of mentors in my life and my career, I should say, and life that really shaped things. I was working I went to college at Illinois State, and I went to work with a buddy of mine whose family owned one of the largest TV and appliance stores in Chicagoland. They're still in business, okay? And no plug here, but it's called Abt, ABT, okay? They literally do $500 million a year in sales now out of one store, believe it or not. So I learned how to sell really hard. And my sister, Julie, was a processor at a mortgage company back in the 90s. And it was true broker, no correspondent. And I was selling appliances. Here's the funny thing about this job. People might be like, selling appliances, TVs, that sounds like $12 an hour job. It was back in 1993, 1994, right about there. And I was making $50,000, $60,000, $65,000, almost $70,000. So think about it. I'm 22 years old, 21, 22. And my dad, I said, should I keep selling appliances? This seems horrible. And he's like, son, you're making $70,000. Stick with the job for now. Okay. And I'm like, okay, all right. And I was doing it, and my sister's the owner of this brokerage. It was in business in Chicago Financial Services. He closed up during the end of COVID. When COVID was over, he quit. He's like, I'm done. And he had my sister as my processor. And it was really interesting. My sister was a brutal processor. She was mean. She was nasty. She was tough. She expected perfection from her brother. She would walk over and throw the file back at me and say, "This is going absolutely nowhere." So it was like, it was, what do they say? Baptism by fire, right?
Yeah,
I-
yeah.
where there'd be arguments like at family Thanksgiving dinners. Larry's the worst. He's the worst loan officer ever. I'd be like, I've been doing it for like 90 days. Give me a break. And she was a really great strict processor. Okay. So I really learned what it meant to keep your processor happy. Okay. And so truthfully, it was really an important lesson. Flash forward, did that a couple years. Mortgage business was going through some stuff there. Um, and then what happened was, I don't know if you remember Sendent Mortgage. Remember? I don't know if you ever heard of PHH. It's actually PHH. Okay.
Yeah, yeah, yeah. Okay, that rings a bell.
A guy named Ralph Burnett, who owns the Timberwolves out in Minnesota, and I don't know if this is too much for the podcast or what have you, but I think it's an interesting story. This gentleman owned about 100 Caldwell Banker offices. He's a multi worth hundreds of millions, owned the Minnesota Timberwolves basketball team, owned hotels in Minneapolis. Okay. People would recognize from that area Burnett Home Loans and Burnett Title. Okay. He led the United States in-house lending because of my first mentor, Jed Stafford. Okay. I got to mention his name. He was such the most patient mentor I've ever had in my life. So they had about a 34% capture rate out of 50 Caldwell Banker offices up north. Now, in-house lending,
Yeah, that's a huge number.
huge number. Okay, they dominated. Okay, and I attest it to Jed, who's now retired in Hilton Head and great guy and still stay in touch. He came to me to be the first loan officer in Chicagoland in the 90s. He's like, your mom works at this real estate office. We got your name. We'd like you to leave the brokerage and all those people and come be in this market. So I learned from him how to lend by learning what real estate agents want. Okay, made me very patient. My first year in my two offices that I had 210 agents in two offices. Business was booming during this phase. Building, it was crazy. And my capture rate was like 15%. Okay. And he's like, well, we'll meet again. And he comes in very patient. He's not nothing. It was like, for a year I struggled. And he goes, well, Larry, it's been a year. We're going to review. And he goes, what have you learned? I said, well, he goes, what are you selling at the sales meetings? What are you talking about? Talking about our rates are great. I'm talking about how quickly we get things done. I'm talking about I'm accessible. He said, yeah. And he goes, okay, so there's one common theme here. I said, what? Yeah, what? I'm struggling. I'm frustrated because your guy in Minneapolis is at 46% in White Bear Lake, and I'm like dying here. He said, Larry, I keep hearing the word I and me in what you're saying. You're talking about I'm going to do this and I do that. The real estate agent community and the agent that you're talking to doesn't really care about you. They care about how much real estate they're going to sell. Now, he said you're a good salesperson, but here's what I recommend. You take one or two agents and you dedicate yourself into their business and helping them grow their business. Back then, take a $3 million agent or a $4 million agent and get them to 6, 7, or 8 by providing the marketing support, the promotion, working with just two of them, not 20. I had literally 200 agents. He says, pick out two. And I did. I picked out two, and because here was the reason. The next, not that year again, I had an okay year, a little better. Was the next year that I surged to like 70 million, which today would be like 200 million. Okay. It was crazy. The average loan size back then, the Fannie conforming limit then was like 325. It's 806 today. Okay. And
Right.
so I learned that these two agents would shout from the rafters that they accredit their success as they're winning their award at the holiday party. Okay. So by the way, you could edit this. Back then you could call it the Christmas party, but today it's the holiday party. Okay. I don't know.
No need to edit. We're good. We're good with Christmas party here.
So at the Christmas party, hey man, just trying to keep it politically correct here, all right? But hey, it's a different world. But anyways, so so those two agents did shout from the rafters that Larry Steinway helped me to my success. And as soon as I turned my career into a value proposition to help others and be a servant to others and help them grow their business, and not made it about me and all the wonderful things me's going to do so me gets paid and me's the greatest. What I did was that. And that was a turning point in my career. Okay. And then it was then that the kind of things got funky and wonky in the mortgage business. There was like a dot-com bust about to happen. And at that time is when and I don't know if you want me to keep going, that's when I met Victor Chardelli, the CEO of Guaranteed Rate. And
that's when you join. So before you go into into that, I want to, first of all, it's a great story. I remember when I was in Chicago with you, and we drove by the ABT, on
the expressway,
building.
Yeah,
on the expressway. And I remember you sharing with me, and this was something that stuck with me because I think it's really important, and it's an important lesson. But you had shared that even though you guys were commission-based sales, you would get probably even fired, I think you said, if you were to, ghost a person who was maybe looking for a really low-end kind of an appliance and versus selling to someone who wanted, a new refrigerator and a whole new set for their home. Like every client, had to have the same value. Can you speak to that? Because you could probably put it more eloquently than me.
I mean, really, if that story, you were fortunate to see it, and if people ever Google app and look at it, they'll see just this amazing. I mean, they send out 500 trucks, I think, every single day from one location. Remember, we drove for about a half a mile, and I'm like, that's still the warehouse by all the trucks. You're like,
it was huge.
A minute and a half has passed at 70 miles an hour. No, that's still the warehouse. Okay, it's like an Amazon distribution center. It really was, right? Filled with trucks. Anyways. So, and I know the whole family, they're wonderful people, and they taught me how to sell. Because what I learned was Bob App's family that started in 36 firmly believed every single person in there that's kind and decent and, coming in, and because there's a lot of weird people that come into these stores with so much traffic, but good customers. If you have a 83-year-old lady who's in her nightgown that she goes to sleep in, but it doesn't matter. She's got curlers in her hair, and she's looking at a $92 microwave, okay? And I know that over there in aisle 3, I got the guy looking at the Sub-Zero for $6,000. Well, you don't have to be in the mortgage business to know that the commissions are a little different on these two products. But his theory was, and he walked the store, Bob App, very quiet. He had 4 sons. He walked the store. His 90-year-old mother was always walking the floor, and he was watching. And if you told that lady and you blew her off and said, I got to go, and didn't give her full respect, because you would get this lady, there's somebody, or a man, a 93-year-old man who's, whatever. I mean, they would want to know how all the buttons work. And you want to talk about frustration is in a sale is when somebody wants you to explain the keypad of a $90 microwave. When you have someone that really wants to buy a $6,000 microwave and maybe walked in the store a month ago, is ready for you, but they want to get going because it's Joey's soccer lesson. And if you can't help us, we're just going to have someone else help us. Okay. So here I am explaining the keypad. And really the theory is this is your point, is that person that I think is just standing there in their 30-year-old shirt and means nothing. Okay. They actually mean everything. They mean everything to the world, because for all you know, they're the parent whose son is Ken Griffin, the CEO of Citadel, that's worth $1 billion and could refer and open up a world of business to you. And that's what the point I'm trying to get me to. But I thought I would set it up a little bit. Okay.
Yeah. No, well, it's just such a good, it's such a good lesson for sales, because you just don't know who the person is. And sometimes someone calls you, like in our business, maybe they're calling about a HELOC. And they're like, well, I need a HELOC. And you're like, I don't really like
I
to
gotta
do
go. I'll
HELOCs.
see you later. I don't
Yeah.
do you. Yeah, boom.
But you don't know. They might own 8 other properties, and they might have other stuff. They might be their brother, their
Right.
dad might be a big builder or something. Like you never know where relationships come from, and which is why it's so important to never be attached to the commission on any given transaction. It's about serving people, and the money comes by doing the right thing. And I just remember you telling me that story. It seemed like so relevant to sales, and something that I think people gloss over sometimes, and they get so
Tony,
focused on the commission.
don't you think even more so today when we talk about
Oh yeah.
artificial intelligence? Okay. And I saw an interesting post. Some guy posted it was a loan officer walking in a nice suit, like kind of trendy. Okay, all right, and kind of like Larry. Okay, and but he had his back to the camera, speaking on a phone, and the meme said, "AI will never replace a loan officer talking to their client." And it was like really just this guy walking, and it basically was saying, we still as loan officers, you have to pay attention to the sale. You communicate. It's just not going to be replaced, and I think some people think they're going to be replaced lately. I hear that
Right.
a little bit. I don't know, maybe 25, 30 years from now, but in our lifetime, I think we're still going to be very viable in this industry.
Well, I think people value human connection, and they value people's opinions and perspective, and a lot of those things, and experience. They want to know that you can share a story of something that's similar to their situation, that's relatable. Like
Yeah.
none of those things are really possible through AI. I mean, it can do the function of originating a mortgage, but
Yeah.
what it can't do is help someone understand, am I making the right decision? Does this lead to the next 2, 3, 4 phases of my life where I want to get to? Am I setting myself up? Can you give me the confidence to know that I'm making the right decision? It's not just initiating the transaction, locking in the rate, filling out the data and getting an approval. Like that's part of the job, but there's a whole other relationship part of the job. And that's the part that can never be, in my opinion, replaced by AI. And people just value that, some more than others, let's be honest, but
Yeah.
I think that people do value that. So interesting. All right. So, and I love that that your sister was a processor, because I think every loan officer, I mean, I never was a processor, but those loan officers that were a processor, or who had like someone like that really helped them understand like what a garbage file looked like,
Yeah.
they're so much better loan officers, and if you had someone that would be honest with you, like, Larry, your file's trash, man. Like, that probably helped you become a better loan officer as the
It
years went
did.
on. There's no doubt.
It did. It did. And that other mentor too always taught me when he hired me, he's like, you take your processor is your boss in that day. I mean, that thing is really just like, that's who you work for, because that's going to make
Yeah.
you or break you, buddy. That was the, you know,
100%. Yeah. I think it was different back then in the 90s when I was originating. I don't know. We were taught different, and good or bad. I think it was good. I think that there was a lot more on the loan officer back then, where I just did an episode, talking about things that you shouldn't do, like and so you got to delegate things out. But back then you kind of had to do everything yourself. Everyone didn't have assistants and LOAs and all this stuff like we have today. And, you learned more about putting a file together. And I think a lot of loan officers, especially those that got in during a really busy time, where there was more leads coming in than you could deal with, you had to delegate off a lot of that. And they just don't know how to do certain things with a loan file that's important. But all right, so let's go back. You met Victor. You started in the IMB space. You kind of got out of the real estate, the captive real estate
in-house
thing.
stuff. Yeah, more in-house, and was not done did the broker thing. That's how I started. And then Victor Chardelli was he hired my best buddy, my college roommate, is loan officer number one. And my buddy called me and he's like, hey, he's like, and the market was funky then with in-house, and it just was some stuff that at the time where my eyes were open. And he said, hey, this guy's starting this company. It's going to be a different concept. It's going to be, we're going to create pods. We're going to build a pod. And I'm like, a pod? Well, the way mortgages were done, and somewhat today a little bit, it's back to it. What it is, we work remotely. Okay. Back then I worked in Chicago, but everything was done in Minneapolis. And my Deb was my processor there. And this assistant, they were all in Minneapolis. And I was here by myself. Victor's concept was we're going to build a pod where you're going to have your assistant, your processor, and your closer all surrounding you at the table. And we bought and designed semicircular laminate tables with a chair in the middle. And that was he was as the VP of mortgage lending. Okay. The concept we went to Siemens with, actually. I've heard of Siemens Corp, big
Yeah.
German. I think they're out of Germany or something, big tech company. Victor had this grandiose idea that we were going to be like Captain Kirk, on the Starship Enterprise in the chair with the team around you. Okay. And that's how our first drawings came out. Okay. And this was the concept of a guy who built a radar detector manufacturing company and sold it for hundreds of millions. That's how this all started. So we built these half circle tables, and it proved to be very successful. That the eye-to-eye contact and level of communication with your whole team would create a much better manufacturing process. And that really was the creation of the pod. And they still call them pods to this day, but it's very much remote a pod. It's Teams, it's the world was. We were still, when we created it, doing hole punch and papers.
Right.
It wasn't.
Acros in your files.
There were no e-folders, back then.
Right. Right.
So,
Well, I think it's a great concept. And I think that, for super high volume producers, that probably works really well. It's just not as scalable, right? It's not scalable to like every average loan officer is going to have this whole pod around them, right?
No,
and so it really lends itself to the uber high producer, a really streamlined manufacturing process, you know? So yeah, I get the concept. And, okay. And so how much time did you spend there at Guaranteed Rate?
I was at Guaranteed Rate for a total of 12 years, I would say, 11, 12
Okay.
years. And then there was a little period during the major meltdown crisis, okay? The 08, 09, remember all that? I did leave.
Unfortunately.
I did. I don't want to go public online with anything, but they had a little financial trial. It wasn't the best time for everybody. Okay. And believe it or not, a local bank right down the street from my house said, IMBs are done. Come be a banker. No licensing, federally chartered. You need us because 0809 meltdown, warehouse line. We don't have warehouse lines. We borrow from the Fed discount window, right?
Right.
That was the
Right.
sales pitch to me. Okay. And truth be told, I left Guaranteed Rate, and I can say this on film that Victor helped me carry my banker's box to my car because he knew why I was leaving. I had two very young kids, and I was like, ah, you might go out of business, right? I was concerned. We all know the story. They definitely did not go out of business, but
Right.
but I got recruited by a large banking community in Chicagoland. Seemed safe at the time, and I will tell everyone to this day, working for a federally chartered bank versus an IMB is two completely different cultures. It is absolutely so different. And so at the time, at least, might be different today, but back then it was black or white. I mean, it was you could not, it was very heavily regulated. And not to say that IMBs like us are just completely Wild West deregulation, but the point being was the OIC was so involved in so much of it, and it was really hard. It was just hard, and that whole federally chartered banking atmosphere really didn't suit me. It wasn't wasn't right. And it's when I went back to guaranteed rate and did a whole nother run of many, many, many years. And then I met a guy at a steakhouse named Tony Blodgett. Here I that's it. And I just celebrated my 1 year this month. So there you are. So boom.
Yeah. Well, look, I mean, I think back to 2008, and at the time, I was at a very small IMB, and it didn't matter. It didn't matter if you were a small IMB or a big IMB. Everybody was on the brink of possibly going out of business because changes were happening so swiftly. I mean, warehouse lenders were closing overnight. Your access to the secondary market, the companies you would sell loans to would just I'm Countrywide being one of them, just like file bankruptcy one day and stop buying loans. Like we had millions of dollars of loans that were to be sold to them. So to think that anybody didn't have days or weeks or maybe even months during that period where there was the possibility of going out of business, it was real, despite how well you ran your organization, because every counterparty that you relied on was dropping. And if that was an integral part of your business at the time, it could have, rendered you, unsustainable because one of your counterparties just filed bankruptcy and now is gone and you relied on them. So I get the stability issue. I don't think it's pointed at guaranteed rate or anybody else. It's just, it was such a volatile time. And a lot of people did what you did. They went for that safe haven move. A lot of people went to Wells Fargo and all these banks, for so long. And it was like the safe haven move until they're like, oh, okay. Yeah. Yeah. And then some time goes by and they're like, oh, okay, wait, the world didn't stop and IMBs still exist. And, and it is a different regulatory environment. There's the federally chartered banks and the FDIC and the OTC and all the different regulators that regulate banks. They're just not as familiar with the mortgage, part of it. And so when you try to treat a mortgage transaction like you would treat a normal bank interaction, it's just different, and
a little stiffer is the word. I don't know what it's just a little hard to navigate. And also you couldn't have all those unique lending products that you can get as an IMB. That was really what it started to come down to for me. Was back then was things market was coming back a little bit, but there were non-warrantable condos because they lost all their reserves and stuff, and the crisis, some of these buildings in downtown Chicago. And those banks just couldn't adapt to getting non-warrantable condo products. And that was really what, then I ran into Victor Chardelli at a Cubs game. And he's like, dude, you got to come back. And I literally called him the next day. And I was like, and literally a week later, that was it. So till I met you over a piece of carrot cake. Okay.
Yes.
Still digesting.
Well, yeah. Well, so let's talk a little bit about your business as it exists today.
Yeah.
You're still very active originator. So maybe just for the audience, a lot of loan officers are going to watch this. What are you seeing? And I've seen you give some presentations. Like what's working today? You've learned a lot over the almost 30 years you've been doing this.
Yeah.
I think that realtors haven't necessarily changed. The market's changed a bit. What's working for you? What are you finding, are the best strategies to keep your business not just sustained, but growing in a market like this?
It's funny. I really do think that we are going through tremendous change right now. I think we are going through a change right now in the way we do business. I think that, a lot of us are having to embrace different methods of communication. And it's really starting to become more and more about building individual brand recognition within a more consolidated lending environment. Okay. So, we've lost 65% of the licensed loan officers. Some say it's 72, 61, whatever the number is. It's 60. It's a lot. Okay. So
it's a lot.
It's a lot. All right. I feel like the way we communicate is changing. The way we have to communicate is morphing right now. Is it a newsletter? Is it a video of me eating chili con carne with a hold the key sign outside a house that I just sold? Okay. Is it me posting numbers, another happy close? Is it a Google review? Is it just there's so many things, social media, um, so we're all fighting to find a new value proposition, okay? Because margins have compressed. you know, is online lending taking over? Is the value of the loan officer taking over? So what I do believe is that we're all trying to find our position in the space, and building the individual loan officer brand is important. But it's really starting to come to fruition to me when I listen to some of these coaching, that we do, the growth coaching, is really that you have to stick to the core basics. And I heard Patty talking about it today, Patty RVLO, in our all call for the company call. You still have to make phone calls. You still have to do the basics. You still have to um, put it in every day and grind hard. And it's funny, one of my colleagues at another company, very successful, said he's eliminating the phrase, it's a grind, from his vocabulary. No more are we saying it's a grind on his team. That's what he said. And I've kind of, now every time I slip and say it's a grind, I pull myself back. It's not a grind.
It's
This
just what
is
you got to do.
this this is what we're doing. Okay. If it's a
Right.
grind, then you're not enjoying what you're doing. Okay.
That's
All
right.
right. So I'm actually really trying to find creative ways to break through relationships. I called today. I've got my sales tracker. I've made 12 calls today to real estate agents. I connected with 4. Okay. I firmly believe this because you know me, Tony. You know I'm not happy with my production. Okay. 40 million, Larry, just doesn't cut it. Okay. All right. You're
Right.
talking to someone who's done 70, 80, 90 millions numerous years, someone who's done 112, 150 million numerous years, and someone who maxed out in the big boom over 200 million. So I've been there. Okay. So when I see me on track, 3.7 million, 4.2 million in a month, I'm not excited about that. It's actually I'm excited about the challenge it's bringing. Okay. Here's my thought. I used to get X amount of loans from these 15, 20, 30 agents, right? They were great. 2, 3 loans each, plus my passbook and some refis. It's 160 loans, 150 loans, average loan size 380, 40. That's 60, 70 million. We get a little rate drop. I get a little 80, 90 million. Oh, that's great. Okay. Well, here's what I've learned is that stat where they said 60, 70% of all agents haven't sold a home in the last 12 months is actually has to do with this little group that I've had. Okay. And they vary in age, this group, from 31 years old to 104. Okay. I mean, they're just the whole spectrum. And so my thought right now is it's a numbers game. And my thought is if I can get 100 agents to refer me one deal a year, that's it. One. I just want one. Meet them, bring a value prop, which is another conversation for another time, maybe. But you have to, as a loan officer, create your value prop. Okay. And I've got mine, you have yours, we all got our thing. But my focus is 100 agents that will at least refer me one transaction. And then I add that with my past customer, did the phone calls that I get from friends and family. Those aren't agents, those are easy. And then I get hopefully some refis that are out there. Okay, that to me is going to get me back to the 150 units, not the 97 or 88 or 100. Yeah, like that's going to double my production. And that's where
Right.
I just want to let that's what I'm focusing on is 100 agents. Well, how do I get there? I get there by building my brand online, but more importantly, and this is where the growth coaching comes in, okay? They're really right about this. You send a text, okay? I don't know about you guys, but I'm getting some really scammy texts now, okay? My whole life is a scammy text, okay? I mean, during this call, I probably got one that's promised me, $40,000 in commission and 105 leads, right? Okay. And you read that and you say, delete and report junk. Okay. That's what we did.
Right.
So I can't really text the agents, hey, it's Larry, give me a call, call me Larry, call me. They kind of blow me off a little bit. I noticed I wasn't getting love there. I find that interacting on their social media, commenting on their properties, their listings, their activity, and engaging in a conversation in that way. And I'm not at this for 6 months. I've just in the last couple months started to do that a little more. Okay. And I'm full disclosure. If you scale your business to have someone that you can share a marketing assistant with one or two or three or four loan officers, whatever that is, sometimes they can do it for you if you give them authority and you trust them and you train them. That's another vein. But the bottom line is, I myself am going on. Great house, Lisa. Awesome. This should sell quick. Thanks, Larry. Really appreciate that. I DM them though a lot. A DM, hey, this is a really
Yep.
great, and it's not creepy, it's just so my point is that is a different way to start engaging. Now I did a couple this morning, and I don't even know this agent, and I did it, and he responded, "Thanks a lot, Larry. Hope things are going okay. Appreciate it." That's all it was. That's it. And I made a note of it, put them on a list of agents that have interacted on social media, and now let's circle back to them again. Keep the conversation going.
And
Okay.
now you can make a phone call and it would be a much warmer phone call,
Well,
right?
it depends on that next DM, I think. Okay. Now either they're going to engage with me a little bit, okay, or they're going to block me and think I'm creepy, so,
So this is interesting because I think there was a period of time not that long ago where text message was the holy grail because
uh,
97% of people read their text.
right.
Everyone stopped emailing, they went to text messaging.
Yep.
But you're right. I mean, I didn't really think about it, but I get so much spam text now.
Yeah.
I'm not nearly as paying attention to the number of missed text messages because you're right. A lot of it's junk. All of a sudden now that's
Right.
got junked up. So maybe what you're saying is, and this is not coming from a millennial, by the way. Like I don't need to give away your age, but
Yeah.
you're not a millennial. You're not one of
No.
these young guys, and you're embracing this, and using DMs and using Instagram and using Facebook and whatnot. That's interesting that's giving you more traction than text messages. That's a big takeaway.
Thank you. Yeah. I think that goes back to what I'm saying is that we have to morph, we have to change. And I know there are a lot of loan officers between the age of 45 and 65. Okay. There really are in our business. I put that number as probably 50, 60%, maybe greater. Okay. I don't know. I think I'm seeing a bit of a youth movement though in originators, and it's kind of cool. I like that,
Yeah. Yeah. Yeah.
but I don't know. I just don't think, it's funny when you watch these shows like on 60 Minutes and you see them show some special person that's older and in their 70s or their 80s, but making a difference and making a change, It shows us at 60 years old, I'm proud to admit it, I'm 60, I feel very relevant and I'm using my experience, A, to serve growth in our region and develop, okay, and influence, okay, and, you know, carry a good reputation, making sure every deal matters. Okay. I was fighting so hard on a brokered deal this morning, and I'm actually in a good mood right now because it's supposed to close Friday. And sometimes it wasn't cleared this morning, which was not a good feeling. Okay. So my point to you is that on that is that, you know, we have an opportunity, all of us, to really embrace what's going on in this crazy market. Okay. That is not a grind. It's just a propensity to move ourselves forward. That's the way I'm looking at it. And
Right.
I don't know if I'm getting too out there on this concept, but I really think, and Tony, I didn't mean to cut you off, but I think our mindset when we come into the office every day, I think a lot of people are struggling with what do I do today? The agents aren't not returning my call. I got all my pre-approved borrowers are dropping out on a lot of their how many offers do they cancel? Okay. Because they heard the tariffs are coming in. I had somebody cancel the other day because their husband makes bowling balls. Okay. And the materials for the bowling balls are 125% because it all comes from China. It's all from China.
Right.
And they're freaking out. and they're dropping out of the golf club because his business model is completely changing. And they were going to buy a house 3 weeks ago.
Wow.
And so, we as loan officers, I think, have to be patient, sit back, use everyday productivity, money-making activities, get in there, figure out what your value prop is to the consumer, to the agent. Today I created a new kind of cool thing. All right. I don't know if I didn't know this. I have to share something with you. I know I'm going off. I'm hogging a lot of time here.
It's all good.
It's
It's
all
all
good.
good.
Okay. I don't want to get on the Blodgett naughty list. Okay. I don't want to, so I like, for example, my newsletter, I just noticed on Mortgage News Daily, they have a widget and a calculator. Like, we created my newsletter. I really dumbed it down. I had a newsletter that was very long-winded, okay? And I had this agent sends me every Monday the newsletter from the guaranteed rate loan officer. Every Monday. He loves me, sends me all his business, and I haven't had the heart to tell him after like 3 years you could stop sending that to me, but he still keeps sending it to me every Monday. And I look at what it is, and it's the rates, and it's a ton of information. Okay. And I look at it, and I don't know what happened. Yesterday, I responded, and I just had lunch with him the other day. I didn't even ask him. I go, "Do you actually like read these things and like these things?" And he responded, "No way. It's way too long, and I don't understand any of it." And I was like, Elliot, you've been saying. So I called him. So I completely recrafted my newsletter today to really shorten it down. 2 little paragraphs. That's it. That's it.
Right.
And I'm going to send that's my new format. And I just realized that that's where we're talking about morphing and changing with the way people are doing business. And people read the subject line, they glance at a little subtext header, they don't even get to that end of that first paragraph. So you better have a
Yeah.
good image. You better have a good image next to it. So I
Right.
found today on Mortgage News Daily, there's a widget that'll show national averages of interest rates. And here's where I'm going with this. Okay. People ask me all the time as I played. Remember, I told you I played golf for the first time. The other one, right? Of course, Larry, what's up, man? How are you, buddy? How's business? What are rates at lately? You ever get that question in your life, Tony?
That's all we get. Of course, I'm in mortgage. What are rates?
So today I'm on Mortgage News Daily. We're recrafting our newsletter. I'm looking for some information. And I see they offer this customizable widget. And I was like, really? Can put in the NAF colors. Okay. So don't worry, legal and compliance. I'm good. I'm good. It's going to be perfect. Okay. All right. Going to be perfect. Hex 3.4721. It'll be perfect. And so I'm going to create a widget, and I want to put it in my newsletter that shows the national average rates in addition to the stuff they're not going to read. But I will be able to maybe get better search engine optimization because they'll use my site as an easy place to find where are rates at.
Right.
So, hey, where are rates at? Oh, just go to lendwithlarry.com. You just go right there. You'll find it right there.
Right.
Okay, cool, bro. Here, I'll text it to you. I downloaded our digital business card. I did that. And there, listen, am I going to run around the golf course waving my digital card at everybody? No. But my point is that, you know, when we go through our day-to-day life, whether we go to a party, friends, all this stuff, I want to, you got to morph today. Drive people to your website, drive them to your brand, drive them to who you are. You want to know what the rates are? Just go to my website. So you see where I'm going with all this?
Oh yeah. Well, look, I think a lot of people in that 45 to 65, kind of age demographic, I don't know that they're embracing the technology and the social and the video. I mean, these are all the things that people are talking about in the mortgage industry. You're actually utilizing every one of them. I mean, you've sent me, multiple videos that you've done. You're like, hey, what do you think of this video? Like, you're embracing video, you're using the technology, you're continuing to evolve and adapt to your business. I think a lot of people would, at 60 years old, would say, I just don't need to do that. I'm kind of over that.
Yeah.
And it's like, the problem is that, well, your business is going to be over pretty soon too if you don't adapt, right?
I'm too competitive as a person. Everyone's got their own threshold. I don't like seeing my name. I like being up in this area, not this area. Okay.
Yeah.
And that's
Yeah.
just a
Yeah.
personal thing. I could put it on, I'll speak it to the world. I'm very competitive and I like to win. And uh, this market makes you really, if you can come out of the other end of this difficult market, I personally think there's so many good years in front of us. So many
Yeah.
good years. What we do now will really matter 2 years from now. I'm going to go one back to that mentor one last time because I was with him, I don't know, for years 2000 or it was no 98, 99. Rates had dropped. And I was in that office, remember? And I was doing good. I was up there in the 35 after I learned and figured out, remember, going read back to that story.
Yep. Yep.
So I chased refis for 6 months. Okay. And I was like killing it. I was number one in the Midwest. So we sit down at the height of the refis. I'm number one in the Midwest out of 175 loan officers. We close the door to the conference room and he goes, "So think you're doing good, aren't you?" I'm like, "Dude, killing it." Like that was back in the day, you could actually keep overage on a loan, by the way.
Yeah. I
Okay.
remember.
Okay. So, I was making, almost $1 million, doing good. Kid, life's good. He goes, "Yeah, you're ruining your business, in about a year and a half from now. It'll be a year from now." I'm like, what do you mean?" He says, "Well, you need to change now because you're chasing refis and you're not paying attention to your referral network. And others are going after your referral network because you locked in 5 refis today. That's fantastic. Congratulations. You just took another week off your future career." And I remembered on a graph, I hit a big lull. I did for about 12, 18 months. And I had to come back, and it does this industry, I would say to any loan officer, what we do now is going to pay off 18 months from now, not 8 months from now.
Yeah. Yeah, well, that's a huge lesson. And I remember, I kind of come from an old school mortgage background because my dad was in the mortgage business. And so when I went through my first refinance cycle, we would track all of our numbers and I had a good month. I'm make it up 12, 14 loans. And he comes in, he's like, yeah, you had a pretty decent month. I'm like, "Yeah, I'm killing it." He goes, "Yeah, you did like 4 units." I'm like, 4? I said, Would you miss the numbers? I did like 14. He goes, "Oh yeah, we don't count those refis."
Yeah, exactly.
And just completely discounted the refis as
Right.
if they were literally nothing, and that's the way I was taught the business. Like, it's all gravy. Don't count the refis. They don't matter. It's all purchase business. But here's what happened, Larry. And then I think we got to put a wrap on this because I know that we both got to go. But what happened is this idea that refinances were kind of sparse, right? They would happen here in waves. It would always be about 25% of your business, but you didn't want to make it a focus. But then we had like a decade
where it was 60% of my business.
Right? For a decade. Like, there might have been a year or two in there where rates jumped up, but for the most part, we had this declining interest rate environment for over a decade, and it completely reset people's perspective on how much value they placed on refinances. And you're right. During the last 3 years, we've been dealing with higher rates. The people that are struggling, and all the 60% or whatever it is, 70% of people, it's not that high, but 60% or whatever that have left our industry, it's because of that reason right there, because had they never given up on the relationships and the purchase business and the purchase focus, they'd still be doing business, now today. And so I think it's a lifelong lesson we can't lose. And hopefully we don't lose it again now that we've been through this reminder that the relationships and the purchase are sustainable, and refinances are great. I think you should take them when the time comes, but it's like, that's your weekend and evening job. It can't be your prime. You can't give up on your people. You can't walk away from those relationships and those sources of purchase referrals.
The annuity is the purchase business. That's the annuity. That's
right.
That's it.
That's right. Well, Larry, I want to thank you for taking the time to come on and sharing your story. You know, you have so much wisdom, and I love your energy. And I think that people have a lot to learn from what you know, how your business has evolved. I know you're not happy with your numbers, but by all standards, you're a top 1%er in the mortgage industry. And the fact that you're not happy with your numbers, I think says a lot about, you know, kind of what your goals are and the standard that you hold yourself to. And I love the fact that at 60 years old, you're not afraid to try new things. You know, you talked about a number of, you know, trying video, trying social, doing this, newsletters, you know, which is kind of an old school, but with a new twist, leveraging it with technology, you know, doing the things that just trying to mix it up and make it work. You guys, everybody that watches this podcast that's in the mortgage and real estate industry, we all need to be doing that. We all need to be trying different things. Don't just do it because it's what everyone else is doing, but certainly try it, because there's a reason why a lot of people are doing social and doing, you know, leveraging AI and all these things. And so you got to at least dip your toe in it. And it doesn't matter what age you are.
Not all of it works. Not all of it.
Not all of it works.
I try stuff and I'm like, that was horrible. And then we don't do that again.
So, well, at least you try it though.
I tried, you know, so that's it. So I really appreciate the time. Actually, it flew by. I didn't think I would enjoy this as much as I did, and it's been fantastic. Seriously,
it always flies by. I always sit down. I plan on shooting a 30-minute podcast. The next thing I know, it's an hour, and that's okay. You know, it's not like we're doing a 3-hour Joe Rogan episode or something.
No, we are not.
This is bite-sized to people that enjoy podcasts.
But if this does go viral, I do get 10%. Right? Is that the
absolutely, absolutely. I got you. All right. Well, thank you. And thank you to our audience. Thank you guys for tuning in to Market Shares every single week. As you know, every Friday we drop a new episode. And if you don't want to miss one, subscribe to the channel and let someone else know what we're doing over here at Market Shares. It helps out a lot. Larry, thank you for your time today. And we'll see all of you next time. Take care.